I'm currently in an Australian dollar Canadian dollar trade that may end up hitting stop loss. As to why I took this trade, the reason is what you're going to be seeing in this video, and if I'm going to be holding or exiting this trade, we'll find out alongside the video. Stick with us to the end and you'll see exactly what we're saying. First off, before we actually look at the chart, let's start with the fundamental backgrounds. What is happening fundamentally in this market? We have the Australian dollar, where the market is currently bearish at 38.75% score rating. This is my personal tracker.
Now, as always, this is not financial advice. This is just me running you through my opinion and why I think that opinion is very, very valuable. So without further ado, let's just head right into it.
This comes from the fact that the central bank is flatlined. There's no good news regarding employment data. The activity, or rather the economic situation, is very good. However, the inflation is literally chewing at it immediately. And you can see all that data right here. Now we move into the Canadian dollar. And the Canadian dollar clearly shows a better economy, currently flatlined, and in the recent 14 days, the data coming out has been positive, meaning there is strength for growth regarding the Canadian dollar. You can see that strength coming majorly from the employment data. Even though the central bank is still flatlined, they decided to hold their rates, and that flat line is a very important situation. But then again, this whole part of the situation is cool. Now let's run a little bit of view comparison of that fundamental stance in the market. Now with the current comparison, you can clearly see that AUD against the Canadian dollar, it stands basically no chance. It is actually currently lower than the Canadian dollar fundamentally, and even in the recent 14 days, the Canadian dollar has been gaining strongly against it. One problem: the leverage fund traders are heavily long the Australian dollar and heavily short the Canadian dollar. That is literally an opposing view. This alone was the reason why I decided to go into this trade. I didn't take a look at any other thing, and I'm going to show you the trade and the exact logic behind it right now. So right here we have the daily structure of the entire market. And what we see here is we have a small break to the downside. In recent times, a very, very small break to the downside. And this break to the downside gave us a small reason, or basically left us with a supply zone. As you can see right here, this area is a clear supply area for us to sell from. Now I am looking into this supply zone and I'm saying price has finally come into the supply zone. Let's head into the 4 hours. On the 4 hours, I saw a reason to finally short this market when price finally mitigated into the zone and placing my stop loss far below, or rather far above, the supply zone, and placing my take profit far below. However, I do not actually use a set take profit. I tend to change my take profit from time to time, but I usually keep it above 1:1. Now, this is the move target, hoping for it to clinch. Problem is, the market is literally hitting hard against me right now, and this is where the scare really started from. So yesterday I entered this trade and I lost $2.36. How come? Well, this is the situation. I first saw it, I said it seems like it wasn't working for me. Didn't see a BOS to the downside on the higher time frame before the trade. Probably fundamentals are going against me. As you can see right here, I wrote it in my journal and I tagged this trade. So this morning, I decided to review this trade again. Like this time, not just review just the fundamental situation, but what's happening across board, which is what my dashboard was really meant for. This is where the whole thing starts to look like it's either a big mistake or I'm smarting my own dashboard at this point. Let's see what it looks like. We're going to dive straight to the most important part of the dashboard to determine what we are saying. We'll dive into the impact table. The impact table, as you all know, is the table where I specifically have everything properly labeled out and well calculated for some product that tells me exactly, is this supposed to be bullish or bearish? Right here, I have the Canadian dollar and the Australian dollar, and it is literally flatlined with a very, very, very tiny pinch of salt to the bullish side. Tiny pinch of salt. And that is literally against my own perspective right now. As we can see, we have a high impact situation that is bearish. a high impact 14 days that is bearish, but we have a technical direction that is bullish at 60% away from the, at a good positive percent away from the 20 moving average. That is scary. Not good news based on my current stance in the market. I have a positive yield market, meaning I should be buying into this market if I want a good yield. The central bank difference is standing stark strong for the Australian dollar. The leverage funds, they are heading real good. And you know the worst part, the retail traders are buying into this market. So I'm supposed to be shorting this market to trap retail traders. So now it is literally conflicting me. I know, I made the dashboard and I'm going against my dashboard at this point. But let's look at every other thing for real, right? If this is the situation of the market right now, what has been happening in the market? And this is why I made a particular part of this dashboard that works with the changes in the market. I want to be able to track the records of this dashboard every day against what is happening in the market to see if my dashboard is actually correct or not. This is where we head into trackings. This is the score trackings. We'll start with the score tracking. We want to track the movement of score against, when I say score, that is the sum product I get at the end of every day against the market close. The yellow line stands for the price close of the day, while the blue line stands for the actual score my dashboard ended up with at the end of the day. And what I see here is my score has actually lied within the 49% for so long. It's just stayed there in the neutral zone. But the market has been aggressively bullish since the 10th of June. Now I can say that I am kind of in the wrong at this point, but I refuse to admit it. And then we have the leverage fund traders. They have been slowly reducing their stance in this market. As you can see, the blue line stands for the leverage fund sentiment. They've been reducing the stance, even though the market has been going up. But the last reduction they did was very small. And I mean very small. All the way from 58% down to 57.83%. That is a very minute change. So they are changing to the downside, but very small. The market is rallying upwards, and I am trying to short at the top. Not really the top of the entire market, but at the top, which is risky. But let's head into the score changes and see what has been happening recently. So when I say score changes in the table, what I'm trying to do is this. In the recent, you select a number of days and say what has been the total change in those recent days on that pair. So we're going to focus on the Australian dollar against the Canadian dollar. And what we have here is just yesterday's change. My dashboard registered a positive change yesterday, despite me taking a bearish stance on this market. So at this point, I can say a lot of things are stacked against me. The fact that my dashboard is literally screaming buy, or basically shut up, sit down, sit on your hands, don't trade, wait for it to be clear. But it's been adding positive stance. That is in the recent day. But when you add up the recent 7 days, it becomes worse. Because in the recent 7 days, my dashboard has compiled an additional 8.6% in total to this market. So basically, I am literally going against my own dashboard, possibly the market at this point, because the dashboard is measuring what the market is saying. And I'm just doing a little bit of trust me, bro. I hope it works kind of trading right now. Let's take a good look at what that really looks like. So the only thing that can rectify me here at this point in this market is that the bias, which I had technically, works. The bias is this. The bias is that this daily supply zone suddenly starts functioning. And when I say it starts functioning, I mean it just suddenly starts to work in my favor to take price to the downside. You know the worst part? When I looked at the economic calendar for the rest of the week, there is nothing regarding the Australian dollar or the Canadian dollar coming out in the next 2 days. You know what this means? There is every tendency this price is going to just keep rallying up. So right now I can say for sure that I'm in a bad trade. But nevertheless, I would still hold on to it, right? Why? Well, this is the reason why. My convention says I should sell because I have looked at the technical data and I have looked at the key fundamental data. But the market seems like they are still holding on to the buying bias. It is not the end of the trading world. Why? Because there will be more trades, and if you keep doing the right thing, there will be positive ends to it. So what is my take in this whole situation? My take in this whole situation is this: I will hold my trade and hold it to either stop loss or profit, probably even break even if possible. And I'll hold it for one reason. I analyze the fundamental stance in the markets. Fundamentally, just economic data based, the market is supposed to go the other way. Basically, my current stance direction. But if the market chooses otherwise, we cannot change that. We're going to have to stick with that, and we're going to see how it goes. If it goes against me, I'm wrong, and I'll take the new stance with the market in the next trade. But for now, this is my current stance, and I hold on to it. Thank you for watching. See you all in the next one. Peace.